Hello, my name is Edmund Shing, Global Equity Portfolio Manager at BCS Asset Management, working in London. Today I would like to show you some charts looking at trends in global financial markets. Starting with equities, we see positive trends both in the US, this grey line, the S&P 500, and also the yellow line, which is the Stoxx Europe Index. Both continue to trend higher, breaking new highs, reflecting the improving economic outlook. So very good look, nice look there. However, if we look at banks, we see a difference of late between US banks, the grey line, moving higher, but Eurozone banks, the green line, actually breaking down from this long-term uptrend. Why? Because credit growth is improving in the US, good for US banks and good for the US economy, but the yellow line, which is credit growth in the Eurozone, remains very poor, showing that banks in the Eurozone continue to restructure and shrink balance sheets, which is difficult for their profitability and also is a problem for Eurozone economic growth. However, insurance stocks, both in Europe, this grey line, and this yellow line in the US, continue to break new highs, helped by a steeper bond yield curve, stronger profitability. They also offer very attractive dividend yields. The second area I really like within equities are industrial stocks. The US capital goods sector in yellow, like General Electric. The grey line, which is European industrial goods, like Siemens. Both benefit from a resurgence in global investment, as does emerging markets, which again, this green line, are starting to improve now. Looking at bonds quickly. Firstly, sovereign bonds. If you're going to invest anywhere, look at this green line, which is the German bond yield. It is going lower, reflecting fears of deflation in the Eurozone. So that is better for if you're a bond investor. Stick in the Eurozone. Corporates also look good, particularly European corporate bonds, where these spreads, which is this grey line at the bottom, continue to grind lower and compress, which is showing that the hunt for yield is still a very important theme within European financial markets. On currencies, this green line is the Euro index, which continues to go up, which is suggesting if you hold Euro assets, good news, but bad news for Euro exporters and for the Eurozone economy as a whole. Whereas this grey line, which is the US dollar index, is actually falling. Better for the US economy, better for US exporters. Finally, on risk, both macro financial risk, which is this grey line, and the green line, which is implied volatility on the S&P 500, both these risk indices are near the bottom, near the lows for the year, suggesting that all looks calm in terms of risk indicators. Summarizing, firstly, US and European equity markets remain in solid uptrends. We remain positive. We favor in particular industrials and insurance at the sector level. Within sovereign bonds, prefer Eurozone bonds given the risks of deflation, and also corporate bonds, again particularly in Europe. Finally, on the risk side, we see no signs of worry for the moment. That's it. If you'd like to contact me, here are my contact details, my email and my phone. For now, thank you for watching, and speak to you again soon.